Hey, Revestors. I'll start off with the big picture, kind of recap where we are, how we're performing, and in comparison to the buy and hold portfolio, and then get into the nitty gritty, more granular detail of everything. Now, long story short, we all know the market goes, has a rising tide. There's times where it has a falling tide, and we are back into a rising tide environment. Now, most people can do all right in a rising tide, but it's during a bearish environment where most people struggle and lose a lot. If we were to take a look at the different strategies here, down below here is the VBIAX. This is the 60-40 portfolio. And more or less in 2022, the average portfolio went down about 20, closed the year out with a 20% loss, which is pretty severe. Now, our strategy ended up closing about a 5.8% gain. So that is a 25% spread compared to what most other portfolios do. So that is pretty important to understand. And it's all because we understand that when the market is not favorable, the stock market, and in many cases also the bond market now, we don't want to be holding those. We want to move somewhere else where we can make money, which was the US dollar index ETF, and really a cash position, just earning interest safely on the sidelines. Now, if we were to just take a peek at what that looks like, here is the pullback on this chart. This is the SP 500. This green one here, which has not hit new all-time highs. Again, if we were just look at the 60-40 portfolio, this blue line, you can see we have not reached it yet in terms of the average portfolio. Most people are still trading below their highs from back in 2021. And they are still struggling. When we look at this, what is very important that a lot of people don't seem to put a lot of value into are the maximum drawdowns. When you look down on this chart in the lower center of the screen here, the stock market and the buy and hold portfolio can have massive corrections, things you can't stomach. 20% pullback in 2022 was pretty painful, but it can be double that. And I believe it will be double that on the next major correction that I think will unfold over the next 12 or so months. What we have is less than a 6% drawdown at this phase, which is a very low risk. And you can see during these times where these markets pull back, our account slowly keeps grinding higher, consistently chipping away, which is the whole point of our strategy, to consistently grow. So when you're in retirement, you don't have to worry about big losses and withdrawing money at those declining kind of rates. So again, if you haven't read our book, Asset Revesting to learn more, just last week we came out with the audio book version. So if you want to listen to it, it's only 3 hours, especially if you play at 1.5 or 1.25 times speed. So be sure to pick up any version of our book. All right. So overall, I know we got a lot of Canadians in there. I'm ready for a big game on Tuesday night, Canada versus Argentina. My son is super excited. He's never really been out to a bar for a game. So we are going to St. Louis Bar and Grill for wings and game night together. And I'm just as excited as he is. Canada's on a roll for soccer. All right, so let's jump into the markets from more of a granular point of view. When we look at our strategy here, you can see we've had some nice signals with the SP 500. We got back in recently. We hit our first target. The next target is pretty high up here. We definitely have got a long ways to go for the SP 500 to do that. But we also thought the same thing right over here. The last time we saw this target way up here, a lot of people are like, well, that's pretty far away. I highly doubt we're going to hit that. And of course, the market continued to go up. We hit those targets. And then eventually the market reset down here. And then we've got a new trigger. So rinse and repeat. Hopefully there is potential for this market to have another blow off move to the upside. Some of the biggest moves do happen right before a major trend reversal, meaning we could see one final big push up here in the stock market, and we might hit that SP 500 target. We'll just have to see. If not, the market will eventually lose steam, trade sideways long enough, or pull back enough that we'll get red bars and we'll have a trend exit signal. Our stop may not get hit. We might get out at a much higher price because the trend says to get out before the stop. Now, keep in mind, if we take a look at the QQQ, which we are long, we are very close to hitting our next target here. We're only about 2% away. If we do hit that target, we will be sending out a trade alert telling you, hey, target's been hit. You should have sold 25% of this open position in the QQQ. We will also provide you with the new stop price, so you know where to put your stop. And of course, we'll remind you to update your shares, because we will now have fewer shares because we've sold more of the position. So we'll provide all of that to you when we hit those levels, if we hit those levels. Overall, if we go and take a look at the markets in general, if we take a look at the real short-term charts here, we look at our momentum 30-minute regular trading hours charts. Now, this is the SP 500. We saw a level down here, these lime green. The market got oversold. Typically, if we are in a strong uptrend and the market gives us this oversold condition, we tend to see the market rip higher from that level. And so far, it's done that. It built a little base. It's rallied, a tight bull flag. It's had the second half of that move. It's creating a bull flag here, and we might continue to ratchet higher and continue to take off to the upside. So overall, charts still look really, really good in terms of higher pricing. Again, this market is running on fumes, I feel. The AI space doing most of the heavy lifting. Nvidia, what's different about this time around is the stock market's hitting new all-time highs, but Nvidia is not. Typically, Nvidia has been leading the way. When the markets hit new highs, Nvidia is also making new highs. And typically, Nvidia has been making new highs before the market does. This time, it's floundering and struggling a little bit, so we'll see how this unfolds. Overall, it still has a bullish chart pattern, just simply because the long-term trend is up. There is a little bit of a bearish bias. This could be a bear flag. This also could just be a base, and it's trading sideways to pop and continue to move up. All the key moving averages are sloping up. So the odds are this wants to go higher. We still are in a bullish phase. So we'll see how that unfolds going forward. Now, I know a lot of people, there are some experts out there that are, betting on Nvidia falling. They're saying it's going to be like, $80 or less a share. They've been shorting it and adding to their shorts. And just keep in mind, if you're following people who are trying to pick major tops, you are going to suffer huge drawdowns, big losses. There is no reason for Nvidia to go down at this point. It's in a strong uptrend. It's growing. It's in an infancy new market and demand, the amount of servers that need replaced. Anybody who's really picking a top in Nvidia, it's a pure gamble. I mean, you don't have a strategy. You're gambling on a trade, hoping it's going to pay off really big. It's not what I do. Gambling versus investing are totally different. As investors here with CGS, we follow the market. We don't try to bet against it and say, hey, I'm going to be a hero if it falls. If it doesn't fall, I'm going to get slaughtered and hurt my account. There's no point in gambling. When Nvidia does roll over and put in a topping pattern and crack to the downside, there'll be lots of downside potential for you to play. There is no need to go picking a top. So don't get sucked into people. Same with people who did this with Tesla and Apple. Back when Tesla was like $37 a share, people shorted the heck out of it. And it just doesn't pay to gamble. It really doesn't. It is the wrong mindset, and it'll cost you a lot. Let's just follow the trends. When we look at our strategies here, it is pretty straightforward. We've identify a wave, we ride the wave, we protect our capital by scaling out, by getting out of the markets when the technicals are telling us at any point this market could roll over. It could have sold off here. It could have sold off even right here and started a new big wave down. We have to be protective until the market says, hey, you know what? There's actually a lot of money flowing in and real money is supporting this. Let's get in and catch that next wave. It's the same with the NASDAQ. We want to catch these waves, not try to pick the tops and be some hero and say, hey, I called that. I nailed that top. That is a gambler's, that is a trader's game. That's not investing. Put it that way. All right, let's take a look at the rest of the markets. What's going on with bonds? If we take a look at TLT, bonds are up a little bit. Again, the grand scheme of things, bonds are in a very strong downtrend. They do have a very similar feeling to over here, which I thought we were going to start to see it go up and to the right, but it broke down. It feels like it's trying to build a base again. It could very easily make lower lows. It could easily flounder here. Maybe it's going to start to rally. We are getting closer to potentially starting to play the bond market. I still think we're a couple months away. if bonds hold up and the momentum continues to try and hold and shift. So the time is coming. TLT is going to become a great asset for us again. It was one of our best trading vehicles when we were in a falling interest rate environment. Stocks, we move out of stocks, we move into bonds, make a bunch of money, get back into stocks when they turn up. So we haven't had that working in our favor for a while. We've had to avoid it, but we're getting close to TLT becoming a heavy lifter, I think, in the next few years. And we're getting closer to some new trades in that. Let's take a look at the VIX. We got people starting to bet on the VIX, saying the VIX, has been low for too long. It's bound to pop, and yeah, it sounds about right. But you don't really want to bet on it. Doing that with the VIX is just like trying to pick a market top. It's just a fancy way to catch something that moves a huge percentage. It's a very dangerous game, and really the volatility is low. And when volatility is low, that means the stock market is going up. And we are long the markets, and we're just sticking with that, knowing eventually there will be a spike in volatility, and eventually we'll see the markets have some type of pullback. But there's no point in trying to pick those. They might not happen for several more weeks or months still, and trying to bet against them will be very painful. Let's take a look at the dollar and then precious metals. If we take a look at the dollar, we zoom out here. The dollar continues to be consolidating. It really is. The big question is this a base or is this a bear flag? We'll see. Whichever way the dollar breaks out of here, I think is going to be a fairly significant move. We could see the dollar rally to 115, 116, or even 120 over the next year or two. If it breaks down, we could see it unwind in a bigger way and head down and towards 90, potentially even the 90 level. Based on Fibonacci extensions, it'd probably be somewhere down in this 90 to 95 range. So there's a lot of potential whichever way it breaks out of here. Now, the big picture, in my opinion, is to the upside. The dollar has been making a series of higher lows, a series of higher highs. It really is kind of consolidating, leg higher, consolidates, leg higher. It's in a consolidation. During the 2008 bear market, the dollar had a massive rally. It also had a big rally during the 2000 tech bubble, had a big move to the upside. And I believe we're going to have another big correction, which will probably send it back up to 115 or 120 and change. If that happens, we're going to see it hit precious metals. We're going to have panic selling. We're going to have the dollar going up, which will put pressure on metals. When we look at the gold chart here, I'll go to, let's just zoom in a bit here. My analysis on gold hasn't changed in a very long time. We are still pointing to 2650 to 2750 for gold. Very tight bull flag pattern, primed and ready. It's actually very similar looking to this one over here. So I think we're primed and ready. It's actually similar to this one over here. A nice leg up, a pause, a leg up, a pause. So we'll see if we can get another push to the upside. And that means the dollar will probably continue to trade sideways or pull back while we see gold move up. Now, we do know from our analysis chart here, from our cycles, let's just go up to our cycles. Precious metals and energies and industrials tend to do very well just before the stock market puts in a top. When we look at gold is up, trading near all-time highs. Energy sector stocks are trading up near all-time highs. Again, last time we saw this, we saw oil and crude oil pop in energy stocks just before the 2008 crisis. We've had them consolidating. They look like they're ready to maybe have another pop and push, but they've had a very strong run. They could eventually, with the market correction, we'll see a big pullback again. If we take a look at the industrials, up trading near all-time highs, which is probably why the reason we're seeing the Dow Jones do fairly well, the Dow Jones Industrial, because industrials are doing very well. It's trading up here in a tight bull flag pattern as well, looking primed and ready for another push, which will catch a lot of top pickers off guard. When we look at the Russell 2000, we get a very different picture. We get a topping phase. We've got this stage 3 looking topping phase in the market where you put in a top, has a sharp correction, it consolidates. Eventually, we still might see a bit of a push up, but overall, this will resolve to the downside. The majority of stocks are not doing well. Technology, AI are doing well, carrying the overall markets up. Let's take a look at silver really quick here. Silver has had a nice pop. Again, this is the weekly chart. Last week it had a really nice pop pushing up, taking a bit of a pause today. We'll see how that unfolds, but it is pointing to $34 and $36 an ounce over the next few weeks. So there's still upside potential there. And the miners should move up as well. Although if the stock market does fall, the miners will probably struggle while physical gold and silver keep going up. So I think the higher probability play is to own gold. The higher risk play with maybe more potential are the gold miners. So there's always a trade-off. If it's got high risk, you got higher potential. I always kind of go for, give me the sure bet, give me the solid investment. I want my money to grow. I don't need it to grow huge. I just want it to constantly be growing. I don't like to risk and go backwards myself. What else do we want to take a look at here? Let's take a look at oil real quick. I know I'm flipping between gold and oil and silver, but when we look at the big picture here, this is the weekly chart of crude oil. What's interesting here, and it's difficult to see because it's really squished on this chart. And you know, I'll just scroll it over and zoom in. But over here, we saw the energy space. We saw oil shoot higher during the 2008 crisis. We saw it start to go up. Eventually, it had a correction and chopped around in this range, and then it broke down into that stage 4 decline, big washout in the financial space. Everything collapsed. Well, if we kind of fast forward to where we are today, and we take a look, we've had a big run up already in energy. It's now kind of consolidating. This looks fairly bearish. And then eventually this should or could resolve to the downside back into the 30s, 40 range and really cleanse that market. So we'll see how all this unfolds. But each time before a major market correction, we have seen oil and energy have a big spike. Maybe we're going to have one more push up. We'll have to see. Obviously, a lot of geopolitical stuff and war, all that stuff going on. We could have another push up, but we're definitely seeing the price action and energy stocks, as I showed you earlier, trading up at near all-time highs. And typically they reverse to the mean, or they reverse from the upper end of the range and have a big move down. So we are very close, I think, to that as well. Just to recap back on the overall cycles here of the markets, we just talked about how industrials, precious metals, and energy are near cycle highs, or not cycle highs, but high all-time highs. Typically means we're near a stock market top. The economy always follows after, simply because it takes several quarters of lower GDP and things like that to consider it a technical recession. But we are seeing those signs come up. You guys have seen me talk about how we're seeing the 24-month moving average of unemployment starting to cross that moving average. Each time we have this, we go into a major recession. So we have that. The government's creating all kinds of jobs. They're not supporting the market. We're still getting more unemployment. Full-time unemployment is now really picking up speed. It's not just like people having their hours cut and trimmed back. These are full-time people saying, you're done. Sorry, business is not that good anymore. And so that is not a good sign. And of course, this is what leads usually into a recession, which is usually a financial reset among asset classes as well. So last but not least, many of you have helped with a lot of the different fundraising, the charities that we help support with Technical Traders. We've done lots over the years. Many of you have been part of it. I helped start the 100 Men Who Care, which there's 100 men. We got way more than 100, but we all donate $100 several times a year, and we all pick a charity to help support. And our goal was to generate $10,000 charity in 60 minutes, in 1 hour. And we all do it over a beer, and it's a pretty good opportunity. We've helped all kinds of different charities in different places. And right now we're working on one, the James Beard, which we're live right now, which my good friend is actually competing in it as the top chef This foundation, you can read about it. It's about supporting chefs in the restaurant and sustainability industry, and it's helping mentoring people and leadership programs and all that stuff across United States, Canada, and abroad. And more or less, this is my friend Mike Higgins. I mentioned this last week that if everybody could vote, you just come. It's free. I'll put the link here. You just click vote and it'll scroll down and you can do one free vote every 24 hours. It's pretty exciting. His wife, his kids, they run a farm, but they run a dining experience on their farm they grow their own food. He's a chef, and pretty amazing experience. And if he can win this, he'll be on the cover. His whole family will be on the cover of the magazine. He gets to have dinner with a famous chef with up here, Carla Hall, all kinds of different things going forward. But it's for a good cause, and it's an amazing family that really trying to show people that you can grow your own food. He's a farmer, and you can serve it and have amazing meals with great people and really enjoy life. So take the extra time. I'll post the link. Anyways, that's it for now. Have a great week. Talk to you soon. Bye-bye.